Lok Adalat, whatever it is settled, mutually settled in Lok Adalat, it is as good as a final degree, because no one banking fraternity also. So I won't be surprised if there is such confusion among the student community also, because DRT and the next step, the surfacey actions, they are actually complementary to each other, because generally we have a notion, once we go for filing a recovery suit in debt recovery tribunal, the law will take its own course. That is not always the case, because the hearing goes on, the arguments, affidavits, stay, whatever that happens. But whenever the attachable assets are available, we go parallelly for the surfacey proceedings also. Coming back to our topic, wherever the attachable assets are there, we go for the surfacey proceedings also. Again, we give a reasonable opportunity to the customers. The set timelines are there in the surfacey proceedings. You will be aware of the various notices, 13.2, 13.4. The timelines are there. We have to give due notice to the borrowers. It is not just a mandatory notice. It is like giving due opportunity to the borrowers, because at any time they can pay off the dues and redeem their securities. Then finally, if still nothing materializes, we go for sale, we go for auction, and then we realize the asset. On the subject of auction, if you had noticed the financial media over the last couple of days, there was an interesting case which was decided against one particular bank by Supreme Court of India a couple of days back. The case is big corporate, they availed a loan of around 100 crores. They paid around 40 crores. For just for example, I'm not going into the nitty-gritties or the interest component. Out of 100 crores, they roughly paid around 40 crores. 60 crores was outstanding. The account became NPA despite the best efforts of both the customer and the banker. Then the property was put under surfacey proceedings. It was put under auction, repeat auction. And I should really appreciate that particular bank for the resilience. They put the property for the auction for the 9th time, because at each time there was no bidder, or the bid amount was not equal to the reserve price. It was very less. In the 9th attempt, the auction was successful. So the auction was successful for around 60 crores or something. It was more than what they required. Some purchaser, he paid it within the mandatory 15-day period. So normally what we should do, the purchaser, the successful bidder paid it. So normally we should give the sale confirmation, we should issue the sale certificate and give the peaceful portion of the property to the new buyer. But in this case, what happened? The original borrower, who had all along been silent for 9 occasions during those 9 auctions, finally he realized some successful bidder from the industry has come in. He has lost his security. So he has approached both DRT and High Court, and he has offered 15 crores more than what the successful bidder offered. That was a rather unique proposition. So the High Court just issued a notice to the concerned bank, and they asked whether you are okay with it, because now you are getting more than what the successful bidder has deposited, whether you are okay with it or you will go ahead with your procedure. That bank, after a lot of deliberations, they submitted before the High Court, okay, we are getting more than what we required from the original borrower itself. We will accept his version and we will refund the amount to the auction purchaser. Aggrieved over this, the purchaser, he went to Supreme Court of India, and after the hearing couple of days back, the Supreme Court of India told no, because there should be some financial discipline. After 9 attempts, a bank has put a property to sale, and all through the 9 attempts that concerned borrower was silent, and now if he is able to more than match the offer of the successful bidder, that means he has the financial wherewithal to repay. So the Supreme Court of India put its foot down rather rightfully, and they passed strictures against the bank, and they said, though the borrower has offered a higher amount, you are given due timeline, due process, and now you cannot penalize the successful bidder. This particular instance, why I wanted to quote is, even the Supreme Court, the supreme institution upholding the Constitution of India, it is concerned about the financial discipline and the due process of law which has to be followed by both the bank and the customer and all the stakeholders. That's one part. More we will deliberate during our interactive session also. Beyond the surface, as Chairman said previously, couple of decades back, he has raised some 10 crore or 15 crore finance from IFCI, ICICI. You will all be knowing, because ICICI, it is in its present avatar, it is different. It is a pure private sector lender. Previously, it was the Industrial Credit and Investment Corporation of India. They, ICICI or the IFCI or IDBI, that previously it was the Industrial Development Bank of India. They were known as the long-term lenders. For infra projects, they used to lend 15 years, 20 years gestation period, long repayment period and all. Over a period of time, the government, they had a rethink, and all these long-term infra projects were also part of the public sector bank's appraisal process. But recently, this sort of, now a rethink is going on, whether we should go back to that development finance institutions, because there is an asset liability mismatch amongst the banks. Because normally we get deposits for 2 years, 5 years, at the most 10 years. Whereas if we keep on lending for 20, 30 years, the two for infrastructure projects, that straight away results into an asset liability match. Of course, that's still in the discussion stage. We don't know the final call on that. And the next step, after SURFACE, that's up to that MSME. Or when it's big corporates, we go to the National Company Law Tribunal, NCLT. They are governed by the Insolvency and Bankruptcy Code. NCLT is just basically an adjudicating authority. They appoint an insolvency resolution professional to see how best to resolve the issue. It is not about resolving the issue and getting back the money for the bankers, because for all resolution plan, whether it is restructuring or NCLT or otherwise, or for the framework for waiver of the stressed assets, in any resolution mechanism, the primary concern is to preserve the economic value of the enterprise. Always, because some unit is viable, why we should destroy the unit? Because it is not about destroying the unit. Because you are closing down on unit, you are closing down the employment opportunity for 500, 100 people, then the indirect employment opportunities, the ancillary things, ultimately the MSME supply chain gets disrupted. So the larger picture has to be kept in mind, and always we try to salvage the best possible out of it. But still, beyond all this positive intent, if we are unable to realize or actualize the recovery, then we go ahead with our NCLT proceedings, we get it, and we resort to the invocation of the personal guarantee of the directors. Because big corporates, private limited companies or other public limited companies, the directors, their personal guarantee is obtained at the time of sanction. The personal guarantee is there, because normally at a higher level where their image is at stake, they feel why our personal guarantee should be invoked. Then the repayment starts coming in. Sometimes they pledge their shares, either their own company or in some other company where they hold their shares. That also we invoke. And still, if there are more bigger cases where banks have to issue, they have been forced to issue lookout circulars. Some high-flying gentlemen, they will be moving out of the country at short notice. We have to stop them. So bank CEOs are empowered to issue lookout circulars also. So they will be stopped from embarking on their onward journey. That's one part. Then we have this CEIB, Central Economic Intelligence Bureau, for dealing with large value frauds. That's generally above 50 crores and above. But they are all a one-stop repository of economic intelligence. They collate, analyze all the data and share with all the stakeholders, including the regulators. Then there is one small notion which I want to clear before I wind up. Madam, I think I'm running. Okay. There is one concept called as write-off. There is a lot of hue and cry in the media, and also because basically our perception is fed by the media. We think we are writing off the loans for big corporates. Write-off happens over a period of time. But actually, when any write-off happens, the write-off, it is always backed by 100% provision. For that particular asset, if that asset is valued 500 crores, 500 crore provision is kept aside so that the capital adequacy is not impacted. Then it is written off as a last resort because there are various parameters. Either the parties are not there, they are no more, or the securities are not there, or the securities, they don't even have salvage value. There is no viability for the unit. There is absolutely no way the unit can survive. Then after a lot of things at the board level, that decision is taken for write-off. But always there is a clear distinction. The write-off, it is just to clean the balance sheet. It is not to discharge the liability of the borrower. The borrower's liability, that is always there. The legal proceedings or the criminal proceedings initiated against the borrower or the corporate, that continues. They will be liable, they will be responsible for that. This write-off is just an accounting exercise to clean the balance sheet. In India, the cleaning of balance sheets commenced during the tenure of Dr. Raghuram Rajan in 2015. He called it the AQR, Asset Quality Review. Of course, it has done a lot of good for the banking industry. Now the balance sheets are getting cleaned. We are getting a decadal low of gross NPA and net NPA ratios. And I would like to conclude with another concept, which is finally, if all these avenues are exhausted and somebody has the intention to pay, but he doesn't pay, what we call him as willful defaulter. It is not only he has the capacity to repay, but he doesn't pay, or he has siphoned off the funds, or he has diverted the funds. Such instances, deliberately which they do, they are all willful defaulters. They are also, on 21st, yes, day before yesterday, Reserve Bank of India has released a draft paper. It is a draft paper for consultation. It is open to public. By 31st of October, we can give the feedback. I would like to get the feedback from you also during the next session, because from the industry, we can get the ground level perception and finalize our feedback. There now Reserve Bank of India has told, once an asset is classified as NPA, within 6 months' time, we have to take a decision whether it is a willful default or not and report as such. Because it has wide ramifications. It is not just terming as willful default in our records. Once an account is classified as willful default, then it's a long process. After full repayment, the concerned borrower can remove his or her name from the willful defaulter list. And as per the proposed draft paper issued by Reserve Bank of India, even after the name is cleared from the willful defaulter list, no additional finance will be given for a specified period. They cannot float any new venture, because sometimes people are canny enough. They float some new ventures in their friends or relatives or family members' name in a totally different, but they are the effective controlling people. No, that is also blocked. For 5 more years, even after clearing their name from the willful defaulter list, they will not be eligible to float new ventures. It is effectively, once, it is like Reserve Bank of India telling, once you have the resources, you pay up, or you face the consequences. That's it. But I was just going through that brief about the symposium, 4 or 5 lines in that invite, where there was a mention about the stress build-up in the banking sector. Of course, there is a stress which has built up over a period of time. The risk has been mitigated. Our view is the risk is being managed well. There is always scope for improvement. There is a feeling also, the banking sector, it may plunge into a crisis anytime. We may fall into a well like that. I would like to conclude that, stating that all is well. Thank you.
Thank you, sir.
I welcome Mr. M. Karunanidhi sir Chartered Financial Practitioner, Chief Life Insurance Advisor, LIC of India. We welcome you, sir. In honoring you, we celebrate the embodiment of excellence and achievement. Now I request Dr. Parashakti ma'am, Head Department of Commerce, to present the memento to our chief guest, Mr. N.G. Arvind sir.
Now I request Dr. Navashimayam sir, Business Process Services, to present memento to Ms. Priya. Ms. Priya ma'am.
Now I request Dr. P. Revati ma'am, Head Department of Commerce, Banking and Insurance, to provide the memento to our chief guest, to Mr. M. Karunanidhi sir. Thank you, ma'am.
One can pay back the loan of gold, but one dies forever in debt to those who are kind. Now I request Ms. Aishwini of 2nd BCom Banking and Insurance to deliver the vote of thanks.
Strive to find things to be thankful for and just look for the good in who you are. With this quote, greetings and salutations to our Honorable Chief Guest, Management Committee, Head and Faculty members of the Department of Commerce, Banking and Insurance, our eloquent students and everyone present here. It's my privilege to propose a vote of thanks and acknowledge the contribution of those who worked really hard to make this symposium possible. On behalf of the entire fraternity of the Department of Commerce, Banking and Insurance, I extend my sincere thanks to the Almighty for making today's inaugural session a grand accomplishment. I extend my sincere thanks to our chief guest, Dr. S. Chandrasekhar sir, in his absence, Corporate Director, Roots Group of Companies, Coimbatore. Mr. N.G. Arvind sir, Functional Head, Senior Manager, Inspector and Audit, Punjab National Bank. Mrs. N. Priya ma'am, Senior Manager, Nodal Officer for Women Entrepreneurs Cell, MSME, Coimbatore Region, Central Bank of India, Coimbatore. Mr. Karunanidhi sir, Chartered Financial Practitioner, Chief Life Insurance Advisor, LIC of India. You all truly made this day enlightening for our signatories. I'm indebted to thank our respected Chairman, Dr.Nalla G Palaniswami sir, and the Madam Secretary, Dr.Thavamani D Palaniswami ma'am, in their absence, for their constant support and motivation. I extend thanks to Mrs. Madhura V. Palaniswami ma'am, in her absence, Director of Academics, Dr.N.G.P Education Institutions. And a warm thanks to Dr. P.R. Muthuswamy sir, in his absence, Director, Dr.N.G.P Education Institutions. I also extend thanks to O.T. Bhuvaneshwaran sir, CEO of N.G.P Research Educational and Research Trust, in his absence. I'm honored to thank our respected principal, Dr. S. Saravanan sir, in his absence, for being the catalyst who stimulated us to do our utmost contribution. I also extend thanks to Dr. P.B. Bhanudevi ma'am, in her absence, Dean Commerce. A session like this cannot happen overnight. The wheel started only weeks ago. It requires planning and bird's eye to get rounded off. We have been fortunate enough to be backed by a team of very proactive and a rock-solid support. I'm short of words for their involvement and willingness to take on the completion of the task beyond their comfort zone. With a deep sense of credit, we thank Dr. P. Revati ma'am, Convener, Head of the Department of Commerce, Banking and Insurance. Organizing Secretary, Dr. R. Geeta ma'am, Assistant Professor, Commerce, Banking and Insurance. And all the faculty members, Dr. N. Ganesan sir, Associate Professor, Dr. P. Satyapriya ma'am, Assistant Professor, Dr. B. Santosh Kumar sir, Assistant Professor, for their untired efforts. I'm gratified to all the audience for coming here and their best coordination for the session. Finally, and yet importantly, a massive thanks to each one of you who made this symposium noteworthy. It has remained a pronounced pleasure. Thank you.
Thank you, Ms. Aishwini.
Now it's time for tea break. I request all the student friends to avail their refreshment outside the seminar hall. And I request all